Is the U.S. economy still growing? The GDP shows it is. While third quarter GDP, which stands for Gross Domestic Product, growth of 2.8% came in below the expectation of 3.1% and Q2's reading of 3%. It is nowhere near signs of recession. It also points to a U.S. economy that remains in a good spot, even though it may be slowing. Remember, slowing and declining are very different. The consumer continued to remain a bright spot in the economy as personal consumption expenditures added 2.46% to the headline number. This was thanks to the growth of 3.7% as service spending growth was 2.6% and goods spending growth was 6%. Durable goods in particular were quite strong as they grew 8.1% in the quarter. Gross private investment had little impact on the headline number as it added just 0.7%, that is actually 0.07% to the headline number, a little confusing on those numbers there. The change in private inventory subtracted 0.17% and residential investment continued to be a problem as it fell 5.1% and subtracted 0.21% from the headline number. This was largely offset by growth in equipment spending of 11.1%. Government spending also was a large factor in the quarter as it added 0.85% to the headline number in a large part due to the growth of 14.9% for the national defense spending. The only major category that subtracted from the headline number was trade as it had a negative impact of 0.56%. While exports were up 8.9% in the quarter, imports were up even more at 11.2%. Overall, I'd say this was a good report. I would warn people that I would not be surprised to see growth slow in the quarters ahead, but I'm still not looking for a recession in the near term. A lot of numbers there, a lot of information, but it's important to know the economy is doing okay. I'm Brett Wilsey with Wilsey Asset Management. Stay ahead in the investment world by subscribing to our YouTube channel and weekly newsletter for the latest economic news, expert analysis, and market insights.